If you are over 60 and you pay council tax, or someone in your household does, then I need you to stop whatever else you are doing and watch this properly, because what I am about to walk you through is one of the most consistently overlooked sources of financial relief available to pensioners in the United Kingdom today. We are talking about a legal entitlement, money that exists, that has your name on it in many cases, that your local council is required by law to make available to you, and that somewhere in the region of 800,000 eligible households are not claiming. Most of those households are pensioner households, people just like the ones watching this right now. And the reason they are not claiming, it is not laziness, and it is not ignorance in any shameful sense. It is simply that nobody ever sat them down and explained it clearly. That is what I am going to do today. I want you to stay with me for the full video because I am going to cover this in a way that actually makes sense. Not just what the benefit is, but who qualifies in practical terms, what the real money looks like, the single most common mistake that costs people hundreds of pounds, the thing about this benefit that your council is unlikely to volunteer, and the exact steps you need to take to get this sorted. I will also tell you about a group of people who may be entitled to have their entire council tax bill wiped out, and who, in many cases, have no idea. I spent the better part of 3 decades working as a tax accountant, and a large part of that work involved helping people in retirement understand what they were and were not entitled to. The thing that frustrated me most, consistently, year after year, was not complex tax law or difficult calculations. It was people handing over money they did not have to hand over simply because they had not been told the rules. Council tax reduction is the clearest, most persistent example of that I ever encountered, so bear with me. This matters. Let us start at the beginning because I want to make sure everyone watching understands exactly what we are talking about. Council tax is a local tax charged to almost every household in England, Scotland, and Wales. It funds local services, refuse collection, street lighting, social care, libraries, all of that. The amount you pay depends on which valuation band your property falls into and on where you live, because each local council sets its own rate. In broad terms, annual council tax bills for a typical property in England currently range from somewhere around £1,400 at the lower end to well over £2,000 in higher rate areas and higher bands. In Scotland and Wales, the structures differ slightly, but the principle is the same. For most pensioners on a fixed income, this is one of the largest regular bills they face. It arrives in a demand letter, it expects to be paid, and most people simply pay it. What the demand letter does not typically shout about, and this is the first thing I want you to understand, is that every local council in England is legally required to operate a council tax reduction scheme. This is not optional for councils. It is a legal requirement under the Local Government Finance Act. Scotland operates a separate but equivalent national scheme. Wales has its own arrangements too. These schemes exist specifically to reduce or eliminate the council tax liability of people on lower incomes. The scheme is variously called council tax reduction, council tax support, or sometimes still referred to by the old name council tax benefit, though technically the benefit was replaced by localized reduction schemes back in 2013. Whatever your council calls it, the function is the same. It reduces your bill, potentially to zero if you qualify. Now I want to talk about who qualifies, because this is where I need you to pay close attention. A great many people disqualify themselves in their own heads before they ever check, and in many of those cases, they are wrong to do so. In England, pensioners, meaning people who have reached state pension age, currently 66, are assessed under what is called the pension age scheme. This is important because the pension age scheme is governed by national rules set by central government, not by local discretion. That means the basic framework of how pensioners are assessed is consistent across England, unlike the working age scheme where councils have much more freedom to set their own rules. For pensioners, the assessment looks at 2 main things: your income and your capital, meaning your savings and investments. On income, the scheme uses what is called an applicable amount, a figure representing the income the government considers sufficient for your needs. If your actual income is at or below that figure, you may qualify for the full reduction. If your income is above it, you may still qualify for a partial reduction, depending on how far above it you are. The applicable amount takes into account your basic needs and can be higher if you have certain disabilities, if you receive certain disability-related benefits, or if you are a carer. This is why I keep saying do not assume you do not qualify without checking. The calculation is more nuanced than simply comparing your pension to a single threshold figure. On capital, if your savings and investments exceed £16,000, you will generally not qualify for council tax reduction under the pension age scheme in England. Below that figure, savings are taken into account in the calculation, but do not automatically disqualify you. There is also a lower capital threshold, currently around £6,000, below which savings are largely disregarded entirely. If your savings sit between those 2 figures, They are treated as generating a notional weekly income for the purposes of the calculation, but they do not end your eligibility outright. I want to say that again in plain English because it is important. Having savings does not mean you do not qualify. Owning your own home does not affect the calculation. The value of your main home is always disregarded. Receiving the state pension does not automatically take you over the income threshold. You need to actually run the numbers or have someone run them for you before you conclude you are not eligible. Now let us talk about the money, because I want this to feel real, not abstract. Imagine a single pensioner living in a Band C property in a medium-sized English town. Their council tax bill is, let us say, £1,500 a year. They receive the full new state pension, just over £11,000 a year. And a small occupational pension of about £3,000 a year. Total income around £14,000 a year, or roughly £269 a week. Depending on the council's applicable amount for their circumstances, this person may well qualify for a partial council tax reduction, potentially reducing that £1,500 bill by several £100s a year. Not the full amount, but a meaningful reduction. Real money. Now imagine the same person is also receiving pension credit. In that case, under the pension age scheme rules, they are highly likely to qualify for the maximum reduction, potentially 100% of their council tax bill. That is £1,500 a year they do not have to pay. Not a rebate after the fact, not a one-off payment. A permanent ongoing reduction year after year for as long as their circumstances remain similar and their claim stays in place. And yet, and this is the thing that I find genuinely staggering after all my years in this field, many people in exactly that second situation receiving pension credit are still paying council tax they do not have to pay, because they never made the council tax reduction claim, because nobody told them the two things were not automatically linked. This is the single most important fact in this entire video, so I am going to say it very clearly. Pension credit and council tax reduction are two entirely separate claims. Claiming one does not trigger the other. When the Department for Work and Pensions processes your pension credit claim, they do not automatically notify your local council. Your council does not automatically apply a reduction to your account. The two systems do not talk to each other in a way that removes the need for your action. You have to contact your local council directly and make a separate claim for council tax reduction. If you are on pension credit and you have not done this, you are almost certainly overpaying council tax right now. I want to sit with that for a moment, because I am not speaking to a hypothetical person here. The data on unclaimed council tax reduction consistently points to a very large number of pensioner households, many of them pension credit recipients, who are in this exact situation, paying a bill in full or nearly in full that they are legally entitled to have dramatically reduced or eliminated, not because the entitlement does not exist, because the claim was never made. Let us talk about another group of people who may qualify and often do not know it. If you live alone, you are already entitled to a 25% single-person discount on your council tax. That is separate from the reduction scheme and applies regardless of income. But if you live alone and your income and capital are below the relevant thresholds, you may qualify for a council tax reduction on top of that single-person discount. These two things stack. The discount comes first, reducing your bill by 25%, and then the reduction is calculated on the remaining amount. In practice, for a single pensioner on a low income, the combination of single-person discount and council tax reduction can bring the bill down very substantially indeed. There is also a specific provision I want to mention for people who have a severe mental impairment, a term that includes conditions such as dementia, severe strokes, and certain other conditions that result in a severe impairment of intelligence and social functioning. If someone in your household has a severe mental impairment, they may be disregarded for council tax purposes entirely, meaning your household is treated as having one fewer adult resident for council tax calculation. This can trigger additional discounts independent of the income-based reduction scheme. If this applies to someone you know or care for, please look into it on gov.uk. It is an entitlement many families never claim because they simply did not know it existed. Now, I want to address the question of backdating because this is where timing becomes important and where people can either recover money or lose it permanently. When you make a successful council tax reduction claim, the reduction applies from the date your claim is made, or in some circumstances from an earlier date if your council allows backdating. Here is the uncomfortable truth. The rules on backdating council tax reduction vary between councils. Some will backdate by up to 3 months if you can demonstrate you had good cause for the delay. Others have more restrictive policies. Some will not backdate beyond the current financial year. There is no universal national standard that guarantees you a long backdating window. What this means in practice is that every month you delay making a claim you are entitled to make is potentially a month of council tax reduction you can never recover. If you have been eligible for 2 years and have never claimed it, you will not receive 2 years of reduction in a lump sum when you finally do claim. You will receive the reduction going forward and perhaps a few months back if your council allows it and you meet the criteria. The money from the months and years before that is gone. This is the honest urgency in this situation, not a fake deadline, not a rule that is changing next week, simply the permanent, ongoing cost of not claiming what you're entitled to. Every April that passes is another year's worth of reduction that cannot be recovered. Let me now walk you through exactly what you need to do. I want to be specific because vague advice helps nobody. Step 1. Find out who your local council is. If you are not certain which council your property falls under, and in some areas this is genuinely confusing because of two-tier local government structures, go to gov.uk and use the Find Your Local Council tool. Enter your postcode and it will tell you exactly which council handles council tax in your area. Step 2. Go to that council's website and look for their council tax reduction or council tax support section. Every council in England is legally required to have this. Most have an online application form. Many also have a telephone application option if you prefer to speak to someone. And some have drop-in services or links to local advice agencies who can help you apply. Step 3. Before you start the application, gather the information you will need. This typically includes your national insurance number, details of all sources of income, state pension, any private or occupational pensions, any other benefits you receive, and information about your savings and investments, including the current balances of any bank or building society accounts. If you have a partner living with you, you will need their details too. If you own your property or rent it, have those details to hand as well. Step 4. Complete the application honestly and fully. Do not guess at figures. Use your actual recent statements and letters. If you are uncertain about any part of the form, the council's own helpline is there to assist you, as are organizations like Citizens Advice, which offers free, impartial guidance and can help you complete the application if you find it daunting. Step 5. Keep a record of when you applied and follow up if you do not hear back within a reasonable period. Most councils aim to process claims within a few weeks, though this can vary. One more thing I want to cover before we finish, and it connects directly to what I said earlier about pension credit. If you are not currently receiving pension credit, but you think you might be eligible, and there are estimated to be hundreds of thousands of pensioner households in this position, claiming pension credit should be your first step. Not only because pension credit itself tops up your weekly income to a minimum level and can be worth substantial amounts in its own right, but because receiving pension credit virtually guarantees you will qualify for the maximum council tax reduction. The two benefits reinforce each other, and pension credit claims can, in some circumstances, be backdated by up to 3 months, meaning you can recover some of the entitlement you have missed. Use the pension credit calculator on gov.uk to get a sense of whether you might qualify. And if it suggests you do, call the pension credit claim line. The number is on gov.uk before you do anything else. I also want to say a word about the marriage allowance and second adult rebate, a less well-known provision that applies in some council areas where a second adult living in your property has a low income. This is separate from the main reduction scheme, and the rules vary. If you have an adult living with you who is not your partner, an adult son or daughter, for example, and their income is low, it is worth asking your council whether a second adult rebate applies. It does not apply everywhere, but where it does, it can provide a meaningful additional reduction. Before I let you go, I want to ask you to do one thing beyond looking into your own situation. Think about who else in your life needs to hear this: an elderly parent, a friend who manages carefully on a small pension, a neighbor who has lived in the same house for 30 years and has never once questioned whether their council tax bill was correct. The people most likely to be missing council tax reduction are often the least likely to come across this kind of information themselves. You sharing this video is not a small thing. It could genuinely be worth hundreds of pounds a year to someone you care about. To check your eligibility and apply, go to gov.uk and search Council Tax Reduction. Your council's contact details are also on gov.uk. If you would like help with the application, Citizens Advice can assist you. Their details are on gov.uk too. And if you think you may also be eligible for pension credit, search pension credit on gov.uk and use the calculator before you do anything else. The money is real. The entitlement is real. The only thing standing between most people and that reduction is making the claim.